A $500,000 mortgage is a beautifully decorated financial suicide note. You are scrolling Zillow at midnight, seeing beige carpets and laminate counters listed as entry-level starter homes. Society calls this the American dream, but the cold mathematics of 2026 reveals a much darker reality for your freedom. The math is brutal. Banks do not care about your happiness. They only care if you are a profitable debt slave. Hello, I am Rabbi Soul, here to decode the laws of money, helping you master the game and find true wealth. If you value your sanity over granite countertops, subscribe now so we can keep exposing these institutional traps as a team. We are looking at the price of your soul and your future freedom, rather than what a bank says you qualify for. Part 1. The Approval Trap. The mortgage approval letter is a masterclass in psychological manipulation and institutional deception. Your loan officer smiles while handing you a document that claims you can comfortably handle a $500,000 debt load. This number is not a reflection of your financial health, but a calculation of how much blood the bank can squeeze from you. Trust is a trap. Debt-to-income ratios are designed to keep you working until the day you die. Lenders happily approve buyers with a 43% ratio, which ignores the reality of inflation and the basic cost of human survival. When nearly half of your gross pay vanishes into a mortgage, you are no longer a homeowner, but a high-functioning tenant for the bank. They use your pre-tax income to calculate affordability, which is a mathematical hallucination that ignores the IRS taking their massive cut first. A $500,000 house is often a 1,200 square foot box of mediocrity. In cities like Denver or Austin, this price tag buys you a yard the size of a beach towel and dated appliances. You are paying a premium for the privilege of living in a neighborhood where every house looks like a beige carbon copy of despair. Is this the dream? Qualifying for a loan and actually living a life are two catastrophically different scenarios. The system incentivizes real estate agents to encourage you to stretch your budget because their commission checks depend on the final sale price. Nobody in the transaction room has a financial reason to tell you that you are about to drown in a sea of interest. They sell you on the emotional hype of a gourmet kitchen while ignoring the ticking time bomb of a 30-year amortized nightmare. The 20% down payment is a relic of a vanished economic era. Saving $100,000 in cash while paying record-high rents is a mathematical impossibility for the average working professional today. Most buyers settle for 3% down, which triggers a cascade of hidden fees that serve as a permanent tax on your poverty. This lack of equity means you are one market correction away from being underwater and trapped in a house you cannot even sell. Private mortgage insurance is a parasite that feeds on your lack of generational wealth. You are forced to pay hundreds of dollars every month for insurance that protects the lender from your potential failure to pay. It is a cruel irony that the people with the least amount of money are charged the highest fees to access a home. The game is rigged. Interest rates at 7% turn a modest loan into a multi-million-dollar extraction. Over 30 years, you will pay the bank more in interest than the original $500,000 value of the actual physical structure. You are essentially buying two houses, but the bank gets to keep the one made of gold while you keep the wood. This is the invisible script that ensures the middle class remains a permanent engine for institutional profit, while individual net worth stays flat. Margin is the only true measure of wealth in an unstable global economy. If your mortgage requires a dual income just to stay afloat, you are living a fragile existence that one medical bill could destroy. True power is the ability to walk away from a toxic job because your housing costs do not own your every waking hour. We must stop viewing homeownership as a mandatory milestone and start seeing it as a strategic move that requires a position of strength. Part 2. The Invisible Leeches. The sticker price of a home is a deceptive mask for 1,000 hungry financial parasites. Most buyers calculate their budget based on the principal and interest, while ignoring the secondary costs that actually drain a bank account. A $500,000 home is not a static asset, but a living, breathing creature that requires constant, expensive feeding. The bills never stop. Property taxes are a permanent rental agreement with the government that you can never truly escape. Depending on your location, you are looking at paying an additional $500 every single month just for the right to exist. Even after you spend 30 years paying off the bank, the state will still seize your home if you miss these payments. These rates often climb every year as local municipalities reassess your property value to fund their own expanding budgets and mounting debts. Homeowners insurance has mutated into a massive monthly burden thanks to our shifting global climate. Premiums have skyrocketed by 20% in many regions as insurance companies struggle to cover the rising costs of natural disasters and claims. You might find yourself paying $300 a month just to protect an asset that the environment is trying to reclaim. If you live in a flood or fire zone, these costs can double, making your dream home a mathematical nightmare before you even move in. The 1% maintenance rule is a conservative estimate that often fails in the real world. On a $500,000 house, you must budget at least $5,000 annually for the inevitable moment a pipe bursts. Your emergency fund will vanish the second the air conditioning unit dies in the middle of a record-breaking July heat wave. Maintenance is not optional, and ignoring it only leads to a devalued asset that becomes impossible to sell for a profit later on. Association fees are the ultimate hidden tax on your privacy and your monthly cash flow. Paying $400 a month for a communal pool you never use is a classic example of mindless middle-class wealth destruction. These boards can levy special assessments of $10,000 at any time to repave a road or fix a shared roof. You are not in control. The total monthly cost for a $500,000 house is closer to $4,500. When you stack principal, interest, taxes, insurance, and maintenance together. The true cost of ownership becomes a heavy anchor around your neck. Spending nearly $5,000 a month on a single asset leaves zero room for the investments that actually build long-term wealth. You are essentially trading your ability to retire early for the privilege of keeping a lawn green and a kitchen updated for guests. Most people are one broken water heater away from a total psychological and financial collapse. Living with such thin margins means every strange noise from the basement triggers a wave of cortisol and deep-seated anxiety in your chest. A home should be a sanctuary of peace, but for the house poor, it becomes a high-stakes gambling dens of daily survival. Stress is the true cost. Utility bills for a larger house will quietly erode your remaining disposable income every single month. Heating and cooling 3 bedrooms and 2 bathrooms cost significantly more than the small apartment you were used to living in before. Expect to pay an additional $400 for water, electricity, and high-speed internet just to keep the lights on and functional. These small leaks in your bucket are what prevent you from ever reaching the $20,000 cash milestone that provides true peace. The opportunity cost of this massive monthly drain is the real tragedy of modern homeownership. If that same money were invested in a diversified portfolio over 30 years, you would likely retire as a multimillionaire with ease. You are choosing a pile of bricks over the freedom to travel, work less, or start the business of your own dreams. We must stop romanticizing the house and start calculating the life we are giving up to maintain a specific zip code and status. Part 3. The 187,000 reality check. The math of 2026 has created a new class of the working poor. To comfortably afford a $500,000 home without constant panic, you need a household income of $187,000. This figure represents the top 15% of earners, meaning the vast majority of people are mathematically excluded from a basic house. The gate is closed. Most families are playing a dangerous game of financial chicken with their own future. Consider the Johnsons a professional couple earning a combined $160,000, which sounds like a massive success on paper. Even at this high income level, the weight of a $500,000 mortgage will slowly crush their ability to build wealth. After the government takes its share of taxes and Social Security, their take-home pay is roughly $9,500. Spending nearly half of your net income on housing is a recipe for permanent stagnation. Subtracting the $4,300 for the house leaves the Johnsons with only $5,200 for every other human necessity. This margin disappears instantly when you factor in the high cost of modern living in a suburb designed for cars. 2 car payments and insurance alone will consume over $1,000, leaving them vulnerable to any sudden change in their employment status. Student loans and healthcare premiums are the silent killers of the middle-class budget. Many professionals must pay $600 a month for the degrees that qualified them for their high-paying jobs in the first place. When you add $400 for health insurance, you are left with a budget that feels more like a prison cell. Education is a debt. A grocery bill for a healthy family is now a major line item that rivals a car payment. Spending $800 a month on food is common when you are trying to avoid the cheap processed garbage that leads to illness. By the time the Johnsons pay for utilities and internet, they have less than $1,500 for everything else in life. This remaining cash must cover clothing for the children, medical copays, and the occasional need to actually enjoy a Saturday afternoon out. Being house poor means checking your bank account balance before buying a gallon of milk. There is a profound psychological weight to earning 6 figures while feeling like you are living paycheck to paycheck in a big house. You become a prisoner of your own success, working long hours at a job you hate just to keep the lights on. The golden handcuffs tighten. The system relies on you ignoring these numbers, so you keep feeding the industrial debt machine. If everyone realized that a $500,000 home was a trap, the entire real estate market would face a massive correction. Instead, they rebrand this financial desperation as a necessary milestone of adulthood and a path to eventual long-term equity. But equity is a cold comfort when you cannot afford to take a vacation or put new tires on the family vehicle. Real wealth is defined by the freedom to say no to things that do not serve you. If your mortgage requires you to tolerate a toxic boss or a soul-sucking commute, you have traded your soul for a building. True success is having the margin to invest for retirement while still having enough left over to live a vibrant life. Freedom is the goal. We must stop using the housing market as a measuring stick for our personal value. Choosing a smaller home or continuing to rent is often the most intelligent financial move you can make in this distorted economic climate. There is no trophy for owning a house that makes you miserable and bankrupts your ability to enjoy the present moment. By understanding the brutal math of 2026, you can opt out of the madness and build a life based on reality. Part 4. The psychology of the shackle. The modern housing market has successfully rebranded financial desperation as a necessary rite of passage. We have collectively decided to call the crushing weight of a $500,000 debt Adulting, to mask the underlying misery. Society expects you to suffer in silence while you funnel every spare penny into a property that you barely have time to enjoy. Misery is normalized. Cultural pressure is a powerful drug that forces rational people to make irrational financial bets. You see your friends posting photos of their new keys, and suddenly your stable rental situation feels like a personal failure of character. We are competing for the approval of people who are likely drowning behind their own freshly painted front doors and designer furniture. This desire for status is the bait that leads you directly into the jaws of a 30-year commitment you cannot escape. The Diderot effect ensures that your new house will demand even more of your future income. A $500,000 home makes your old furniture look shameful and triggers a spiral of reactive spending on new rugs and decor. You are not just buying walls, but an entire lifestyle that requires a constant stream of new purchases to maintain appearances. The spiral never ends. Real estate agents sell you a dream while the math delivers a cold and lonely reality. They tell you that renting is throwing money away, while ignoring that interest and taxes are also non-recoverable costs of your capital. Paying the bank $40,000 in annual interest is just as gone as paying a landlord $2,000 in monthly rent. The difference is that a renter has the mobility to leave, whereas the homeowner is shackled to the asset by a heavy chain. The American dream has been hollowed out and replaced by a high-stakes game of survival. Previous generations bought homes for 3 times their annual income, while you are being asked to pay 6 or 7 times yours. Trying to replicate the milestones of your parents in a broken economy is a guaranteed way to ensure you never achieve wealth. The math has changed. True wealth is having the position of strength to walk away from any deal that is rigged. When you refuse to overpay for a starter home, you are preserving the capital that will allow you to buy when others are forced to sell. Financial peace of mind comes from the margin in your bank account, not the equity in a house you cannot afford to maintain. By opting out of the collective insanity, you gain the ultimate competitive advantage in a world that is obsessed with debt and outward displays. Your identity should never be tied to a zip code or the size of your primary residence. We must learn to find value in our freedom, our health, and our ability to choose how we spend our limited time on Earth. A $500,000 house is a tool, and if that tool is crushing your spirit, it is time to put it down. You are more than bricks. Reclaiming your financial narrative starts with the courage to say no to the traditional housing script. There is immense power in living below your means and watching your investment portfolio grow while your peers struggle to pay for repairs. The goal is to reach a point where work is a choice and your assets provide for your life without requiring your constant labor. This is the path of the money rabbi, where we decode the traps of the world to find the hidden rules of genuine lasting freedom. Owning a house you cannot afford is a slow death for your spirit. You have seen how the hidden costs of property taxes and maintenance can turn a $500,000 asset into a cold financial prison. Choose to prioritize your liquid freedom and investment margins over the hollow status of a designer granite countertop that consumes every single cent of your entire monthly take-home paycheck. Math dictates your future. Realize that your worth is not tied to a zip code or the square footage of a building you do not truly own yet. True success is having the power to walk away from any toxic situation because your housing costs are low and manageable for you right now. Master the game of money by ignoring the cultural pressure to buy into an overvalued market that seeks to shackle your long-term financial potential right now. Many people think that buying any property is a guaranteed path to building wealth, regardless of the massive hidden monthly expenses involved. What is the maximum monthly payment that allows you to sleep peacefully tonight? Please like this video and share your honest housing numbers in the comments section below so we can learn to navigate this rigged game together. Community builds real strength. You are the strategic master of your own financial narrative and future destiny. I am Rabbi Soul, and I will continue to provide the logical data and psychological relief you need to escape the modern-day rat race. Subscribe now to join a brotherhood of logical thinkers dedicated to reclaiming their energy from a broken and fundamentally rigged economic housing system starting today. Remember that your time is a finite resource that is far more valuable than any piece of wood or brick on a tiny suburban lot.